All right, folks, so it is 7:03. We want to be mindful and respectful of everyone's time. So we'll get started now. Thank you all for joining us this evening. I am Carrie Patlis. I am the Director of Administrative Ministries. I provide staff support to our insurance committee. I'm joined this evening by a few members there. If we could take a moment to introduce ourselves, let's start with Erica.
Hi, I'm Erica White. I am the chair of the insurance committee. I took over from Laverne earlier this summer. Pass it on to Dave.
Well, that was short. Dave Stevenson, member of the insurance committee. I work currently for Philadelphia Insurance after having been at Liberty Mutual for 35 years, and I am a large account property underwriter.
Marty, you want to take a moment?
Okay, I'm Marty Bauer. I was on the board of trustees. They wanted me to be the chair, and I chose to become co-chair of the insurance committee a number of years ago instead of being chair of the trustees. And when I went off trustees, I stayed on the insurance committee.
Thank you. Paul?
You're muted, Paul.
You're muted, Paul.
Good. Now,
Mhm.
I'm still Paul Carlotto. I've been a member of the insurance committee for probably 12 years or so, and I'm a member of the First United Methodist Church in North Andover and wear a lot of hats.
Thank you, Paul. And Jeff?
Yep, thanks. Hi, everyone. I'm Jeff Evans. I represent Sovereign Insurance Group, and we're your new insurance agent. We're excited to work with all of you and serve you. We work exclusively with churches, schools, and nonprofits. So we're here to help, and hopefully this is a little bit enlightening. I know there's been a lot of questions, so we're here to help.
Thank you. Ben, our Director of Communications, do you have any input for us at the moment? Any housekeeping before we get started?
Greetings, everybody. My name is Benjamin Musasizi. You can call me Ben, Benji, Benjamin. It all comes from my name. So, but in New England, I'm very much known as Ben. I'm the Director of Communications for the New England Annual Conference of the United Methodist Church. I'm happy to be here and ensure that this event goes seamlessly and that everything goes smoothly. It's going to be recorded and provided later on the conference website. So feel free to participate and ask your questions, and let's see where this goes. Thank you and be blessed. I'm going to run off, but I will be in the background just to ensure that everything runs smoothly.
Great. Thank you, Ben. So for our participants, this is a webinar format. What you're seeing in front of you are the current panelists, which are the members of the insurance committee. You, as an attendee, will not be shown on the screen, and your interaction is going to be in the Q&A box and the chat box at the bottom of your screen. The chat box is just used for general comments, and it's kind of like a running ticker of comments. The Q&A is really where we want you to ask your questions. That's where we can monitor and we'll keep track of those questions and can answer them live or type the answer in the box. That chat feed kind of gets a little clogged sometimes, and we don't want to miss anything that you have to ask. So please interact with us via the Q&A. We will pause periodically during the presentation to address those questions. And so I'll be monitoring those for you, and we'll ask our insurance committee to take those questions at the right times. So you won't see yourself there, but, oh, and I'm seeing that the chat box is disabled. I will work on that. But thank you for answering in the Q&A, because that's the perfect example of we see that in real time. So while I work on the chat box, I'm going to hand it over to Erica to get us started.
Oh, what happened?
Erica's muted.
Can you guys see my desktop?
Yes, we can.
All right, does it look like a PowerPoint?
Yes.
Yeah.
Okay.
Yep.
Hello, everybody. Welcome to this conference. We are going to go through a lot of detail tonight. I'm a big believer in you can never tell anybody enough if you want to make them comfortable. So you're going to learn more about insurance tonight than you want to know. And this is everything you didn't want to know about the unit insurance program. Please do ask questions and then hold us accountable to make sure that we answer your questions. So if you ask a question and you don't think it was answered right, please put something else in there and say, hey, that wasn't what I was actually asking. So as we go tonight, I wanted to start by who is the insurance committee. And the point of this slide, can you see it, Paul? Everything good? Okay.
Yeah, I'm good. I'm sorry.
Okay, that's fine. Who is the insurance committee? The point of this is that, like most of you, we are members of churches in the New England United Methodist Conference. Glenn did a really nice job of explaining how much insurance experience he has. I have 30 years of experience at a property casualty company. And I'm also a fellow in the Casualty Actuarial Society, which is as close as you can get to having a doctorate in insurance. And that means tonight I'm going to use a lot of concepts that to me are just like breathing, but might be confusing. So I'm asking Marty and Paul and Dave to step in when they think that I've gone too technical on you. But we also have a lot of other members. Carrie has been wonderful through this whole process. She is our backbone and she supports us and also has to deal with all of your questions off to the side. So she's been really wonderful in that. Laverne steered this committee for years and steered us through the changes you're seeing here in a really faithful way. And I want to thank him for his service. Marty, you've met already. Bernie is another person who's been on this committee for years. Paul is on here. Glenn is desperately trying to get on, but we haven't been able to get him to sign back in. And then Dave introduced himself. The other point I want to make is that this committee is looking for more members. So if you really want to have say in the insurance committee and you think you could add value to us, we're always looking for members. Talk to your pastor, talk to your district superintendent if you want to be part of these larger decisions. I also want you to know that none of us think that are getting good deals on insurance right now. So there is no personal benefit for you or your church to be on this, but it's a huge benefit to the conference to have as many people as possible helping us make these decisions. Any other comments from my larger group on this one?
Nope.
Okay. So first, a very quick history on the unit insurance plan. The unit insurance plan was initially approved at an annual meeting in the 90s. I can never get the exact date, and has been reapproved every year since. So what I want to point out here is every year this is voted on. So every year it could be voted out. And you should keep that in the back of your mind if you don't think it's representing your church well. The goal of the plan was to assure that all churches in the conference had adequate coverage while using the purchasing power of hundreds of churches to get the best price for everyone. So we will talk more about that later, but there is a real benefit for us coming together as a group. Once established, churches in the conference have been required to purchase insurance through the program. So you can't go out and get a competitive bid at this point. That has been a sore spot for my church for years. And it is the way it is, and it's how it works, because the way we get the benefit of being huge is that everybody has to be part of it. But that is a constraint of this program. The plan was originally created in partnership with Fred C. Church, who is an agent who was in Boston, and they represented the conference and provided service until the spring of 2025 when we moved to Sovereign Insurance. And we will talk about that decision a little bit later in these slides. And the insurance committee, who is presenting to you tonight, was established by the Conference Board of Trustees to oversee the program. So that's what the unit insurance program is. I know that when Vermont came in and they had to come on to that, that was a big switch in how they've done it. There's not a lot of conferences that do this. We are somewhat unique in the national sphere, but I do think that there are benefits to doing this, which we'll talk about later. Any additional comments? from the group? Okay. Any questions, Carrie?
The only question we have open at the moment is better answered later on in your presentation, so we'll get to it then.
Thanks. All right. So what exactly is purchased through the unit insurance plan? We have a very, very broad coverage here. So there's a bunch of data on the slide. Remember, I'm an actuary, but a lot of different coverages. So we have our property liability, which is provided by Church Mutual. Within that package, we have property and liability for everything except flood and earthquake losses. We have our general liability, abuse and molestation, and religious counseling. And some of those coverages are hard and expensive to get these days, particularly abuse and molestation. And we have 1 million per occurrence and 3 million aggregate limits on that. There's business income for if your church gets shut down to keep your finances going while things are coming around. That's $250,000 per occurrence. And then we have crime, which is if somebody within your church is stealing from you, that will cover up to $100,000. So that's really important coverage. It is 78% of our total premium. So it's the very, very big part of it. I'm going to deal with the very last column at the end of this. Then we have earthquake and flood, which is provided by various carriers. Flood in particular is a very important coverage for us. So flood is usually not embedded in underlying property coverage. You will also know this because legally insurance companies can't even sell it to you on your home. It has to be provided through the government. In this case, that's not true for businesses and nonprofits. This is provided by commercial insurers, but it is separate and different from the rest of the coverages. We've had real flood losses in our area recently, particularly up in Vermont. Not nearly as much as the rest of the country, which is being wiped out by flood right, left, and center, but this is becoming a much more expensive coverage going forward. Earthquake is another one. We don't have lots of earthquakes in New England, but when you have an earthquake, it does not take much to do damage. The earthquake they had down in the mid-Atlantic, I want to say 6 or 7 years ago, did close to $3 million of damage to the National Cathedral. So if you have a large structure that has a lot of stone in it, an earthquake can be very damaging. So we have that as well. Neither of these has a lot of coverage, but it's the best coverage we could get on the market. Wind and hail is very specific to catastrophes. So this is the stuff that's on the coast. This is from hurricanes and then hailstorms. We don't get hailstorms like they get down south, but we do get hurricanes. And so this particular coverage is mainly covered by Church Mutual, except for a couple of churches, or for 5 churches we have on the Cape where Church Mutual won't cover it. So we buy a specific policy to cover them for wind and hail. Then we have what I call the frosting coverages, directors and offices and employment practices. These are covered by Great American. Directors and officers actually is protecting all the people in your church who serve on board and committee. So if someone were to come back and sue the church for what they thought was a misuse of power as a board or committee, this is the coverage that would cover your members. So this is a fairly important coverage. If you're serving on SPRC or some other committees where this could potentially happen if people were looking for money, this covers those groups. Umbrella is a coverage that goes over the top. So if we split through under any of the underlying limits, it allows us to cover up to $10 million. Cyber risk is some coverage, and this is primary cleanup coverage. So if someone were to come in and hack your church, which most of our churches would be very easily hacked, this gives you some money to try to reestablish records and figure out where you're going to go. That's what cyber risk is. And Jeff, you can always step in if I'm misrepresenting these. And then work comp and auto are very specific to the church based on what staff you have and what vehicles you actually own. So as you look across this, as you will see, the property liability, earthquake, flood, and the wind hail are the majority of the premium for this particular plan. Historically, and this is very important because it's going to come up again and again as we go through this presentation, the way that it was decided to allocate this premium in the past. So what would happen is that the conference would get a big premium bill for the whole conference and they had to allocate it. And the way it was decided to allocate this premium was for property coverages. It was based on what percent of the total insured value your church was of the entire conference. Okay. Total insured value would include how much is your church insured for, how much is your parsonage or other buildings your church insured for, and how much contents do you have across all those buildings. That's your total insured value. So then you add that all up for the conference, including all the conference buildings, and your percentage of that total was how much of that premium you would get. For the liability coverages, it was based on your square footage in your church. So again, you would fill out the square footage part on your annual, the annual thing you have to do for the conference every year, and that would all get added up, and your percentage was how much of that premium you would get. All right. So, and then for work comp and auto, those were specifically calculated by the church. So that's how premium has been historically allocated. So, any questions, Carrie? Any comments from the rest of the
Yeah. Yeah, so we've got 4 open questions at the moment. I think 2 of them are probably timed well right now. So we do have the question if the D&O provides legal defense as well, to
Yeah, I
follow
can
up to
jump
your
in there.
overview.
Go ahead.
Yeah, so it does. It does include legal defense. Defense costs are not included in that limit. So you have a $10 million shared limit for, you know, any type of verdict that's issued, but defense costs are actually included up to whatever that number is outside of the $10 million limit. And the other thing that I would add that is in that coverage is employment practices. And so those claims are typically discriminatory in nature. So let's say your church is sued as a result of hiring, firing practices for age, gender, race, et cetera. Those claims are a lot more prevalent now than they were, 5, 10, 15 years ago. They're actually one of the more common liability claims that we see nowadays. So that's included in that $10 million limit there. I just wanted to point that out.
Thank you, Jeff. Erica, we do have another question that pertains to, something you referred to early on. The question is, if unit plan is a good deal, then why so few conferences have this plan? Is that something you can?
I can take that one if you want, Erica.
Yeah, go ahead, and then I'll add a little color at the end. Go ahead.
Okay. Yeah. So our agency actually works with a number of annual conferences throughout the country, including 5 groups now in total. And the honest answer is it's really hard to put a program together. So the conferences who have unit programs have had them for a long time. Nowadays, insurance companies are really hesitant to put a new group together because they're taking on a lot of risk in one area. And so quite honestly, getting that number of churches together and pooling premium in that way is just really hard to do. So it's not necessarily a matter of there's a better way to do it. It's just kind of really hard to structure it that way and to get buy-in to do it.
Thank you, Jeff.
It's also
Go
very
ahead, Erica.
difficult. Yeah, it's also very difficult to administer, as we are finding as we go through this, right? But
Yeah.
because of this insurance plan, we are able to keep churches on our rolls who would not necessarily be able to get insurance outside of it. So there are things that we benefit from coming in this as a whole. So we want to perfect this so then Jeff can take it and sell it to all the other conferences and it will become the norm.
Good.
All
We do have another question that's appropriate for this timing. The question is, will the move to using specific rateable risk attributes for each church negate in any way the savings from purchasing our property insurance as a large group?
It shouldn't, because at the worst you would hit what you would have gotten if you're out in the market. But because we can actually get better deals by rate, by the amount of increase that are going on and the amount that we spend on commissions, it should overall still bring it down. But we have to prove that to you. So I don't want anybody to think that we're just assuming this is true. We have to prove it to you. And over the next year, we're going to be working very hard to get the analytics to do that.
Great.
Yeah, and I think I just add that the group is still getting a discount. The specific risk attributes are just something that the insurance committee didn't have access to before, that always existed, and now they just have access to.
There is still one question from Stephen Bascom. I promise I haven't forgotten about you, but we're probably going to get to your question a little later on, so we'll address it then. So the Q&A is empty at the moment.
Okay. So I'm going to turn it over to Jeff, who is our new insurance broker, to talk to us a little bit about the church insurance market difficulties that are out there right now, just so that you understand where we are against the whole market and when we try to go out to insure.
Thanks, Erica. Yeah, so I have the fun task of talking about the insurance market of the last few years. I think a lot of, why people are on this call and, some of the issues that I'm sure you've all felt at the local church level is due to a lack of insurance company profitability over the last few years. So church insurance is a niche market, and there's not a whole lot of carriers who can offer all of the necessary coverages that Erica went through on the prior slide. And so when those 3, 4, 5 main players in the space all suffer tens of millions of dollars of losses in a given year over the last couple of years, you start to see some of the renewals that you've seen with large increases, deductibles increasing, coverages being pulled back. And so a lot of that stems at the top, right? If the insurance companies aren't making money, they're going to start making major changes. And so what's caused a lot of, the struggles there stem from catastrophic property losses. And the two main areas that we consistently see are severe convective storms, which is really just a fancy name for a really bad thunderstorm, and freeze claims, which are especially prevalent in, this part of the country in older buildings. And so over, basically the last 3 to 4 years, starting in probably February of 2021, there was a terrible freeze down in Texas. There's been these weather events throughout different pockets of the country, whether it's a bad storm in, the Midwest, or wildfires out in California, or, a really bad freeze in Christmas of 2023 up in Buffalo, I think it was, right? So there's these pockets of things that they're not maybe a large fire claim that's costing an insurance company $10 million, at once, but these big weather events are causing them, $500,000 at this church, and then up the church up the road, there's another $250,000 claim. And so these events didn't traditionally happen, 10, 15, 20 years ago. And so insurance companies are learning and modeling, and that's led to a lot of the changes that you've seen in the property insurance over time. On the liability side of things, social inflation is probably the biggest driver over the last few years. And social inflation is an insurance industry kind of made up word, and it's made to capture the difference between what you see, everyday inflation, right? The grocery store, the cost of eggs, for example, is obviously a big talking point lately, but it's a difference between, the inflation you see there, and the inflation insurance companies see in verdicts and settlements throughout the country, right? And so what they're basically saying is, yeah, inflation is increasing, but the increase that we're seeing in settlements and verdicts throughout the country is far greater. And so because of that, they've pulled back on limits. So it's a lot harder to buy a $10 million umbrella like we have, but they're also increasing prices as a result of that too. And, I think as Erica was spot on, right? Sexual misconduct's really hard coverage to get nowadays, and to get $1 million per occurrence is even more difficult. So that's kind of speaking to the benefit of the group, is being able to find some of these hard to get coverages. Specifically in, New England, and, honestly, anywhere in the Northeast, right? We have older buildings. So deferred maintenance is a huge talking point for insurance companies. So, it's one thing to say that your roof was updated 3 years ago. Well, we need to show proof now. A couple of years ago, it was kind of enough to check a box to say, hey, we replaced our roof 10 years ago. Well, now we need to show documentation. Did you rewire the building? We need to document that. And so it's a matter of proving to the insurance companies that, hey, we're investing in our building. You're not going to see deferred maintenance claims, and we're going to continue to, present the church and the conference as a whole in its best light. And that's something Erica's going to talk to later. But as we kind of move into next steps for the, future of the program, being able to document maintenance and, kind of show that, the churches are in good shape, even though they're, might be older buildings, is really important. And so, kind of all that doom and gloom has resulted in, what you've seen over the last few years, which is, pricing increases, coverage pullbacks, lower limits on abuse and molestation, lower limits on umbrella, higher deductibles, different types of deductibles. There's now deductibles for water damage claims, pipe burst claims that are separate from your normal deductible. There's wind and hail deductibles that are also separate from your standard deductibles. So insurance companies have really kind of changed their approach over the last 3 to 4 years. And it's a result of kind of all of these things, all together at one time. And so that's kind of the end of my insurance market update. And I'll kick it back to Erica.
All right. Were there any questions on that, Karen?
So we do have a follow-up question about the relatable risk. The follow-up question is, but I'm assuming the rateable risk attributes have always been taken into account when determining premiums for the conference. I'm sure that Church Mutual has long had the information available to their underwriters.
I would agree with that statement, but it was not
Okay.
it was not passed on, at least to the insurance committee.
Right. And the other two questions that we have open are related to like modified replacement costs. So I think we'll probably address those later.
Okay.
Thanks.
Dave, did you want to add anything to the insurance market?
I'll add one comment where the questions regarding the rateable attributes and so on. Those are, and you, my colleagues here will correct me, that is more tied to how we're allocating the premiums to the individual churches as opposed to the total premium that we are paying as a conference. Isn't that correct, Jeff? So that's more of a committee reallocation based on your church's individual characteristics. Because someone said, is it a better deal? I don't think it impacts our overall pricing as a conference, correct?
Well, I think the conference pricing has always, I guess, has always kind of been what it was. What we've learned over the last couple of months is that Church Mutual can provide us with the actual premium that they are charging the individual church. Whereas in years past, I don't know if they couldn't or if it just wasn't passed along to the insurance committee or the old broker, but that information was not had on hand by the insurance committee. And so now that the insurance committee has the actual premium per church, charged by Church Mutual, that's where you're seeing that difference in allocation.
Right, but the question, right, I totally agree. The question was, is the conference getting a better deal because of this? And I was just trying to state that it isn't really changing our deal. It's how we're allocating the premium more.
Yes,
appropriately
correct.
to the
Yes, I would
individual
agree with that.
churches. That's all I wanted to
Yep.
clarify. Thank you.
Yeah, that's very true, which is that's how Church Mutual has always done it. We just never saw it. Okay, so moving on, I want to make sure there was at least one bar chart. 'Cause every presentation needs at least one bar chart. But what has the impact of everything Jeff just told us been on the conference? And you have lived this, and every single one of us has a church who has lived this experience. As you see, for the past 4 years, 5 years, we have had double-digit increases in our coverage or in our premiums. So we had 14% in our 21 renewal, we had 12% in our 22 renewal, we had 18% in our 23 renewal, we had 9% in our 24 renewal, and that has led to a total increase in our premium of 64%, which is huge. And that has been driven both by rate increases and also by Church Mutual insisting that we increase the total insured value on our churches, because the rate of property inflation has, or construction inflation has been very, very high compared to the rest of inflation. And so industry-wide, buildings have been getting behind what their true replacement cost is. So to accurately rate, they needed to make sure that we would increase our total insured values. So those two things have driven this increase, and it's huge and it's painful. And so I don't think there's much more to say except that it's horrible. And the horror of it led us to do a bunch of stuff this year. And so that's this slide here. So I think everybody knows last year we did a bunch of stuff that we probably shouldn't have done to try to address this. But the insurance committee, under the directorship of Claire Chapman, who was the our finance officer up until she retired last spring, decided, okay, we actually have to go out and figure out if we can even begin to make this work. So we formed a subcommittee to look at all the options we have to change the program. This subcommittee is still in force, quite frankly, because we made the first set of changes, but there's more to come. The committee, the first decision the committee made was to put our, to go out and get quotes to be our representative or our broker. So we'd had Fred C. Church for a number of years. Our long-term agent retired. We lost probably a woman named Patty, who many of you may have worked with a number of years ago, and she kind of was the glue that held a lot of it together. And then Fred C. Church had been acquired and then acquired again. And so they are getting to be a part of Gallagher, I think it was one of the biggest insurance agencies in the country, without any real knowledge in church insurance. So we allowed them to bid again just because they had so much history and they worked with us for so long. But we also brought in Sovereign at that point to bid. Based on that bid and our experiences to that point, we decided to part ways with Fred C. Church, or I don't even remember what their name is now, and then go and move on with Sovereign. So Sovereign picked up really representation for us in June of 2025, probably a little bit earlier, because once they found out they didn't get the deal, Fred C. Church pretty much dropped and ran. So you've been dealing with Sovereign. I think it's really important at this point to state the changes that you are seeing right now have nothing to do with that change. I mean, they do, but not the way you think. It wasn't like we got Sovereign and then your premium went up. Sovereign came in and they took over the program. And then other things we found out after that led the insurance committee to make decisions that's changing a lot of people's premium. So Sovereign is not responsible for the rest of this. This is stuff the insurance committee had to decide on. Sovereign did negotiate an almost flat premium renewal for the conference. So this year we didn't have a double-digit increase, we had flat, but that's not the experience most of the people on this conference call are having, so I really don't want to dwell on that right now, okay? So as we go into it, any additional comments from the insurance committee that's out there, Paul, Marty, Dave?
Erica, we do have one question from the Q&A
Okay.
that's related to that conversation. The question is, why did you only compare Fred C. Church against SIG? Did you not look at other appropriate broker organizations?
The reason we left it with Fred C. Church and with SIG is because SIG was very, very a boutique firm that really works primarily with churches and with conferences, and they had that experience. I'm sure we could have gotten quotes from other large national brokers, but I will say, based on my experience in the insurance industry, and Dave can disagree with this, but I don't find that moving to large insurance brokers actually gets you better service, because their goal in life is to make you as cheap as possible for them. So we were looking for someone who really understood what we were doing. As we went into this, I will say, even with just these two bids, we significantly reduced the commissions that we are paying on this unit insurance plan. So even just by this competitive bid, we have made this a much better option for the churches than it was when we had stayed with Fred C. Church.
Erica,
Yeah.
I would say that for a number of years or several times, Fred C. Church did go out to look for other carriers other than Church Mutual. And we're unique because we're separate states that are all bound together. And what some companies won't insure, what we have coverage for everybody. Like in Vermont, they won't cover certain things, and Rhode Island, they won't cover certain things. So it would be a real headache to try to piece everything together for a unit plan like we have. And
Yeah.
we always felt, and Fred C. Church did, do us some favors a few times.
I'll make a couple comments related to this too, that Erica mentioned a flat rate. As I said before, I'm an underwriter handling a lot of large property business. My company's rate increases over the last few years are 10 to 15% overall. And this is a great result for us, despite how, as Erica mentioned, folks are on the call because their premiums may have gone up, but the overall premium with the commission negotiation that Erica mentioned is fantastic. And the other thing regarding the question about other brokers, this is millions of dollars in premium. I'm not sure that showed. We can't go to a mom and pop agent on the street that handles small automobile customers and homeowners. There's only so many like a Sovereign that have the expertise to be able to do this. So keep that in mind that, you have limited options given the size and scope of the program.
Mm-hmm. Thank you. So Erica, we do have two more questions that are probably appropriate for this wheelhouse. The first is, help us understand, You have provided our cost allocation breakdown every year. Now we hear this is the first year the insurance committee has all the data.
Yes, that is a true statement. We have provided you what the conference chose to allocate the premium by. So the allocation that was given to you was based on a decision made back in the 1990s to allocate premium based solely on, you know what, we're going to come to that slide next.
Okay.
I think I'll just, okay, is the other question similar?
Well, the other question is, was any consideration given to self-funding some portions or all of the insurance? For example, the replacement cost premium was 60+% of our total premium and not something used or would have, needed to be used in the 170-year plus history of our church. So that might be related to the next slide, maybe.
There was a proposal to self-insure, if that's the question that you're asking, to go ahead and say, yeah, we're going to insure the first X% dollars. All right. And I don't want to get too much into this because we can get super insurance geeky, which I would have fun with, but no one else would. The problem with that is that we didn't even know how to allocate the premium that we were getting from Church Mutual. To go self-insured, we are not prepared to actually do the work necessary to become our own insurance company, and we're not big enough. So it wouldn't have made any sense. So Fred C. Church did propose that we self-insure, but that was really not a viable option for a bunch of reasons. Maybe someday in the future we'll be good enough for that. It was talked about, but for right now, keep in mind, we had to do the RFP process. We got our new agent, and now we had to bid insurance. So we're kind of here now, but going into the future, all those things are very, very much possible. So again, if you're excited by these ideas, please join us on the insurance committee and we can continue to look at them. So this is what we found out through this renewal cycle. Now, first and foremost, I do want to tell you, I've been asking for years to get the premium by church. This was not a one-time ask that we only came up with this year. I've been asking this for years. And every year was told no. So we did finally get from Church Mutual what they rated every single one of the churches in the conference on the unit insurance plan. And it was discovered that the conference allocation methodology was wrong. Okay. As an actuary, I had known this already, but I didn't have any way to prove it. But we discovered that it was wrong. And the way that it was wrong was a couple of things. So for everybody who hadn't read the letter as detailed as some of you clearly have, the first is that location is huge in property insurance. Catastrophes, which Jeff talked about on an earlier slide, are one of the primary drivers of losses right now in the US. And where you live is what drives catastrophes. I am never going to get hurricanes of any merit in Springfield, but if I'm on the Cape, those are real risks. And that's the way it is. The same way as if I'm at the bottom of a river basin, I'm going to be more susceptible to flood. So everybody has to be aware that where you are is really driving insurance risk right now, because the majority of the big losses right now are catastrophes, which are weather related and very specific to location. This was totally being ignored in how we allocated premium historically. We only did it on insured value and square footage. The other piece of this is that it was assumed that every dollar of insured value had the same rate. Okay, so if I thought the rate for the first $100 was $1 per 100, and then I would just if it was a $10 million church, I'd still charge them $1 for every $100 of coverage. That is not in any way how insurance works. So if you think about it, a majority of the losses people have are under $100,000. And they're things like, my windows were blown out, my basement was flooded, and they're all very similar. And so as you think about that, for a smaller church, it's going to have that $20,000 loss, and it's only going to have $200,000 of insured value to cover it. So the rate's going to be higher. If you're a $10 million church and you have that same $200,000 loss, it's a much lower rate to cover it. So there's not a one-to-one insurance value to rate, and that's how we did it, okay? And so what this made happen is that there's a very large misallocation that happened, and the insurance committee was not aware of this. I suspected it, but none of them had spent a lot of time studying insurance like I had, was not aware. But what this led to is a very significant subsidization of small churches and a very significant subsidization of churches in coastal areas that have much higher cat risk, according to the industry, okay? And this has been occurring since the beginning of the program. So we've had this large unknown subsidization going on. The problem is, as we have churches leave, we have different things happen, this subsidization wasn't known. It was extreme in some cases for some of the larger churches. And we can't make changes to this program while these subsidizations occur because we don't know how the changes are actually going to impact how churches pay. Like, so I can't tell you right now, I mean, you come to me and say, I want to buy a higher deductible to save some money. I can't tell you what that would save you, because what you're being charged right now is not what you actually are costing the conference in most cases. So that was probably a horrible job on that slide, but those are some of the concepts I wanted to get out. So other people on the insurance committee, what can you add to that to make it clearer?
Well, I would give a general commentary that in the insurance business, and you, Erica, talked about size of the church and the coastal catastrophe exposures. There's many things that determine the rate, the property rate. And if you look outside of just churches, the occupancy, if you're a dynamite manufacturing plant, you're going to pay a lot different rate than a church. If your building is sprinklered versus not being sprinklered, if you're well constructed. We have a lot of frame non-sprinkler churches, but other occupancies and other buildings can be constructed much differently than others. So a well-constructed sprinklered building pays a lower rate than one that is not sprinkled and made of wood. And that is not how it had been done. Everyone was charged the same over all these years since this program has been in place. So we're trying to correct it and get those buildings, those churches that have more exposure or are smaller, the proper allocation of the premium.
Thank you, Dave. And a follow-up question has come through the Q&A to that point. The question is the new allocation used as the basis for the current insurance cycle or next year?
We are going to be implementing this over 3 years. So to fully move to it was considered too extreme. So we're moving to it over 3 years. The first of this 3-year cycle was with this renewal cycle. So the impacts that you are seeing in your premiums are the impact of this first year's premium or moving toward that, or the first year of this change.
Thank you, Erica. Jeff, I do have one quick question that is probably related to the slide previously, but I think it's a good one for you. The question is, was the United Methodist Insurance Program, UMI, considered at this time, or is this organization not a brokerage organization?
So we are the United Methodist Insurance Program. So the United Methodist Insurance went through a big RFP process back in 2022 and selected us to be the only broker with any ties to United Methodist Church all throughout the country. I will say there's a little confusion sometimes because it used to be a captive a number of years ago. And I think like around Hurricane Katrina, there was a number of issues with that. And so they disbanded the captive about 10 years ago. And so now it's just exclusively operates as a brokerage organization. We're in the Book of Discipline and backed by GCFA. So that's kind of part of how we first got connected with all of you.
Yes, thank you, Jeff. The only 2 questions remaining in here are related to the modified replacement. So I think we're probably okay to move on to that.
Yeah. And this one, and as a member of the insurance committee, I want to apologize to all of you for this particular one, because we have caused a lot of chaos that we're going to have to get out of because of this particular one. Modified replacement coverage is not a true solution. It may be a solution for some churches going forward, but the way that it's done, the way that we implemented it, it's not what we think it was. So this was recommended to us by Fred C. Church to reduce premium. Because of the way we were allocating premium based on two very simplistic characteristics, square footage, which didn't go down, but total insured value, the way that your conference premium was allocated did go down significantly if you chose modified replacement coverage. So what modified replacement coverage is it's an insurance coverage that says, all right, the building I have now is worth $5 million. But if that building were to burn down, I don't want to replace it with a $5 million building. I'm going to replace it with a $2.5 million building. Okay. So as you think about that particular thing, you're going to say, okay, I'm not going to ever have a $5 million loss. The most I'll ever have is a $2.5 million loss, and that will reduce my premium. However, and because of the way we're allocating, that would have reduced your premium by about 50%. But in truth, from an insurance risk standpoint, the probability of a total loss is very small. So the fact you were ever going to hit 5 million was very small. Most of your losses are under $200,000, and none of those go away if you reduce your premium, your total insured value from 5 million to 2.5 million. All right. The only ones that go away are any losses from 2.5 million to 5 million, which is a tiny, tiny, tiny little percentage of your losses. So the actual risk costs of that particular thing for the insurance company is much smaller than 50%. So while the conference was reducing your premium by 50%, the premium being charged to the conference was only being reduced by 10%. So if you can imagine, in the most extreme case of this, if everybody went to modified replacement cost, we'd all end up paying the same amount for a lot less coverage, because the total cost of the insurance to the conference would have only gone down 10%. Yet our insured values would have gone down a ton. So that's what you have. So that was a true thing when we were doing this. I never understood how we could reduce it by half. And now I know how we did it, which is the conference did that. But what was happening was that church was getting reduced, and other churches were then having to pay more because the total premium charged to the conference wasn't going down the same amount. So this particular thing was skewing allocations further and driving really poor risk decisions by churches through poor information. So if I went to your church and told you, hey, if you reduce from 5 million to add a $500,000, I'll give you a 10% decrease, you might not ever say, I want to take that deal. Right? But you thought you were getting a 50%, so you did it. All right. So that was a lot of information too. So I'm going to, again, insurance committee, Jeff, anything I could have made clearer there? Easier to understand?
I'll give an example that back up the numbers you cited on a very large account, not too different in size and hours, around $500 million in insured values. The company decided they wanted a $200 million limit instead of a $500 million limit, and we cut the premium 6%, not 60%, whatever that math would be. A small factor, because in that case, especially with a large blanket limit, 99.99% of the losses will be under the new limit. So a small credit was given, it was 6 or 7%, similar to what Erica just mentioned Church Mutual is giving us. So you've got to remember that the example she gave was a perfect one. If you had a $5 million value church and you chose a smaller limit, 99% of all losses would still be paid. So how can we give you that particular church a 50% credit? That was the wrong way to do it.
Yep, that's spot on. I don't have anything to add.
Thank you, folks. We do have 2 questions that have been, waiting for a little bit related to the replacement coverage. So I think you may have answered them in your slide, Erica, but I just want to, restate them because they have been waiting. This particular question is, I'm from UMC of Auburn, Maine. we need to have an updated evaluation of the church's replacement value. Is there someone from the new insurance program who can help us with that?
Yeah, I
don't know
mean,
if
I
you-
think as the broker, we can always, we're not going to tell you that we're, real estate appraisers. That is, certainly the best way to do it. But I know those cost thousands of dollars. And so that's, not something many churches want to do. But we can certainly take a look at, each building, in and of itself and compare it to other buildings in the area with similar kind and quality construction, similar square footage, and try to come up with an idea of, if we think it's overvalued, undervalued. I would just emphasize that, we're talking, to replace with like, kind, and quality, right? So it's not what you could sell it for on the market. It's to actually replace the existing structure, the square footage multiplied by the cost per square foot. And so, not to say that, every building is perfectly valued, but I do think that, when you look at it, we can run certain, internal models to see, where you stack up with other churches in the conference. But at the end of the day, the best actual answer is to get an appraisal. But we can certainly, work through other, maybe more affordable options for you.
Great, thank you, Jeff. And another question related to the modified replacement. For churches that have switched to insurance replacement only, would we see a significant savings from the switch? And does that include demolition cost? I think you kind of covered a little bit of that, but just to reemphasize that and address the demolition piece.
Well, the demolition is included in your limit. So you just need to make sure if you're going to build a $2.5 million church and it's going to cost $1 million for you to get rid of your old church, that you get a 3.5 million limit, is how you think about it. But as we move forward, we are going to be doing modified replacement coverage very differently. Or we're going to be going through the process of deciding if we want to do it very differently. And we're going to actually, once we get through some of these changes, be able to tell you what you'll save by doing it, and hopefully give you better guidance on how to choose values as you make those decisions.
Okay, and so to reiterate, we're not saying it's going away, because that was one of the questions that just popped up. It, goes without saying, does this mean it's going away? We haven't said it's going away yet, but it's going to be looked at more in depth by the insurance committee in the coming months, and we'll proceed from there.
There are absolutely times when it makes sense to do this. I think it's also really important that everybody understand that when you move to modified replacement coverage, it also changes how you repair your church for the small claims. So for instance, I am a member of a very large building that was built to look like a Gothic cathedral out of somebody's weird delusion. And anytime we do a fix, it's very expensive. But going forward, since we're a modified replacement coverage, they aren't going to replace our leaded windows. They're going to say, we're going to give you money to put windows in, but they may not match your church. And so as you go into this, it also reduces how you fix your church and how it may look going forward.
Okay. There's like two more related, I think, to this, but I'm not sure if one is a question or more a statement. He writes, it was also explained too, is that if we increased our replacement cost, that there would be a dollar for dollar increase in premium on the increase, even though it would only be a 10% decrease for MRC.
So going forward, if you need to replace the, if you need to increase your insured value, we will actually get the rated cost of increasing that insured value and tell you. It won't be a dollar for dollar. You will get the appropriate rate that the insurance company says you need to cover that extra amount. And it'll,
Yeah, moving forward, any endorsements throughout the policy period from now moving forward, we're going to have actual cost on that will be related to our office and then related to Carrie and her team, where she would be able to bill you appropriately for it.
Mm-hmm. Yep. A follow-up question to that has come in. Do you accept a change from modified replacement to full coverage? So if a church is currently on modified, can they opt to go back to full?
yes. Again, not this moment. We are still under the deluge of this first set of changes. And I want to make sure that we're giving you the right information as we do this. And so, yes, going forward, we are going to have better conversations with churches on modified to explain to them what the true cost of that is and see if they would want to increase back up again.
Great. And one more on this slide, and then, isn't the risk of a total loss going up with the trend in catastrophic storms, fires, etc.?
I mean, I think with not so first thing to remember is that that some of this, like in some cases, this particular insurance policy may not even cover you for the catastrophes you're talking about. So if you're under that additional wind, hail, none of that would even apply. That's got to be all outside of that. But yes, technically, that's why the insurance premium is going up so much in total. But it's still much easier to wipe out a $500,000 building, church building, than it is to wipe out a $4 million church building, because they're bigger. There's more stuff going on. They're probably built differently. So I don't have the actual rate structure. We could debate this, but the rate is always going to decrease as the building value increases, unless every loss is a total loss.
I'd just add too that the frequency of all losses is increasing from a property perspective. And so, yeah, I would agree that probably the total loss is a little bit more likely now than it was maybe 5 or 10 years ago, but just the percentage chance of a loss in general is also, from a frequency perspective, up as well.
Thank you. So the questions that are in the Q&A at the moment are better answered as we continue with the presentation. So you can go right ahead.
So the changes that you are seeing right now, so the 25-26 policy year, which started September 1st or August 1st, I can remember. The changes you are seeing, I want to reiterate, are not being driven by Jeff and Sovereign, but by the insurance committee decision to more accurately connect a church cost to the risk they are presenting to the conference. Unintended and unknown subsidies between churches are being ended. Okay, and we really have to do this so that we understand what the true cost of every church is. We may at some point decide that we want to subsidize churches for specific reasons, but we will do that outside of the premium allocation and through other methods going forward if we were going to do that. Over the next 3 years, the premium allocated to individual churches will move to the premium that they generate for the conference. The changes you are seeing in this renewal cycle, and this is depressing, is the first of 3 installments. So if you're seeing increases, you're going to see increases next year and the year after. Okay. Modified replacement cost is no longer going to automatically reduce your church's premium proportional to its decrease in total insured value. And if you were highly subsidized before you change to modified replacement cost, it's possible you will even see an increase after you move to modified replacement cost. Which again is just a really bad message from us, and I'm really sorry about it, but that's how much some churches were being subsidized. We are evaluating how to move forward. I think we said that with MRC. This will be communicated with the churches early next year after we kind of work through some of the processes. I'm just going to hop onto the next slide. So the future of the insurance program, and I'm going to state again, you guys can always vote this out. There are a lot of churches on this call, 48. If you want to vote us out of the unit insurance program and go straight to market, you have the ability to do that. But let me give you a little bit of sale on why that might not be in your best interest. We believe, and I really do firmly believe this, that a unit insurance plan is the best way for the conference to minimize insurance premiums and guarantee coverage for all churches. Okay. The conference has real power to negotiate, which no individual church does. We're right now only paying a 9% commission, whereas you went individually to market, you would pay anywhere from a 15%, more likely an 18% commission on your premium. And Sovereign was able to hold our renewal flat, and we do have plans to more aggressively market going into the future, which we'll talk about. We do have a group dividend program, which means that if our loss costs are low enough, we do get money back. And we have had years in the past where we have gotten significant money back and returned it to the church. You will not get that as an independent church out on the market. We also get better service and loss control than an individual church. So you have multiple people at your back to help you when losses occur versus having to just kind of go straight out yourself. For churches experiencing a large increase this year, you are being moved to your market rate. So what I'm telling you right now is what you are paying is lower than you would pay if you went and you just got an agent and looked for it. You are being subsidized. If we end the unit insurance program, you will go flat to market rate. So instead of getting this 3-year bump, you're just going to hop. So I know that this is horrible. And look, I went through a year where my church's premium went up by 60%, and we had started at $55,000. So if you can imagine what that looked like to us, it's horrible to have to come up with this. And I'm really sorry it's happening, but you are still paying less than if you went direct to market. And Jeff, if you could back me up on that claim, that would be helpful.
Yeah, absolutely. So our firm works with 6,000-7,000 churches all across the country. And, you know, I think a lot of what we've seen over the past few years that I kind of highlighted is, you know, kind of here to stay. And, you know, I think a lot of the churches, as, you know, David mentioned, are, you know, frame construction churches. And, you know, I'm sure a lot of people on this call have churches with insured values, you know, under $10 million. And, you know, right now in today's marketplace, those are by far the hardest placement of insurance for churches is frame churches, older buildings, and, you know, less than $10 million, less than $5 million of insured values. There's not very many carriers out there right now that are open to providing replacement cost property coverage. They're open to providing replacement costs on roofs, and that are willing to give you, again, some of those liability highlights that we've went through, you know, in, again, today's market, which is far different than 3 or 4 years ago. So I would definitely back up what Erica said.
All right. And so last one, and then see if there's any remaining questions. And I appreciate all your guys' tolerance. I didn't know how long this was going to go. There's lots of additional analysis waiting to come. And again, I'm going to plug, if you want to be part of this fund, please tell your district superintendent you'd love to be part of the insurance committee. We are going to do a lot of analysis around the modified replacement coverage, which I think we've hammered pretty hard. We are rethinking what coverages will be required moving forward. We have a very, very broad insurance plan, but it just may not be affordable to have that amount of coverage going forward. And we're going to have to make that decision, but we will be coming back to you on any of those questions, particularly for the churches in the Cape who are part of that separate wind hail. We are going to be coming back and having real discussions with you about how we move forward. We need to develop a process to address chronic non-payment of premium. The thing most likely to blow up the unit insurance plan is that we have some churches who just don't pay. And we as the conference can't afford that. So, so we are thinking through how do we actually address churches that don't pay. Very importantly, we are going to be building a database of insured assets to allow us quickly market the program as the market shifts. So right now, kind of the information is not real complete and it's all over the place. So Jeff and I are going to be doing a targeted effort to get all that together. And we may be coming out and asking you guys for data. If we ask for your data, please be aware it's because we want to be able to market quickly to get the best rates possible. And if you could turn that around, it would be really helpful. We are remarketing the program, as we said, and please continue all the loss mitigation measures that have been put in place. Laverne has done an incredible job at making sure that we've had the water sensors, that we have people out looking at the building, that we have adopted all of Church Mutual's loss mitigation programs. If we can keep our total loss ratio low, we're stronger competitively, we can get better dividend programs, and we can bring premium down even further. So that's my sell for the for what's happening next. But again, if you really hate this, you can vote against it. You have that freedom. And I don't want you to think that you're required to do this. You have that freedom to vote it out and to make the case for doing that. So, insurance committee, other things you want to add to all that?
I just add that data is of the utmost importance. I know Marty mentioned, I think the old agent went to market a couple years ago, and quite honestly, the information that we have on hand is really limited to square footage of the building, building value, and maybe construction type on some churches, which for anyone who's worked in the insurance industry at all is really almost nothing for what insurance companies look for today. So we did send out an initial kind of survey when we first took over, just to kind of make sure we had the addresses right, make sure we had the buildings right, and try to get up to date on the schedule. But we're going to be asking for a decent amount of information. And like Erica said, please just know it's coming from a place of the more information we have, the better. And the more information we have, the better job we can do to remarket the program and drive better results for all of you.
I was going to say, we're trying to do the best we can because it affects all of our churches. We are connectional. We just aren't out to, better our own particular church, but we have to look at the overall picture.
Right.
So there's a
So-
few questions that have come up in the Q&A. So I do have a couple of questions that came in via email from our participant that was unable to get in for access to the webinar. They're kind of specific to their church, but I do want it recognizing the recording that these questions were asked. So I'll ask them here, and some may be too specific, but the first question is, why is 100-plus-year-old unoccupied parsonage insured for $600,000 when we've asked many times to have it reduced to a more reasonable replacement value?
It would really depend on the square footage, quite honestly. So, if the square footage is 4,500 square feet, then that's probably maybe not enough. I'd have to probably know a little bit more.
Okay, so
some of it's insurance company mandated too. Like, insurance companies are never going to go less. Dave can probably back me up on this, that insurance companies aren't going to go below a certain cost per square foot and still offer replacement cost coverage.
And did that question say it was vacant or not unoccupied? The rate should be
unoccupied. It's
Oh, it is.
listed as unoccupied.
well, that's more of a hazard and risk. The fire rate should be higher than the standard rate because it's more prone to loss.
Correct. Yep. So that they also asked, why aren't we allowed to purchase insurance locally at a much more favorable rate? And so, to kind of piggyback a little bit on what Erica has said about voting. So the unit insurance plan is presented every year at annual conference as a resolution. And it is within that resolution, it states that all churches that are covered in the United Methodist Church of New England annual conference need to participate in the unit insurance plan, and you cannot purchase outside of it. That is a resolution approved and ratified every year at annual conference. And so when Erica refers to allowing your voice to be heard to vote against the unit insurance plan, that's essentially what she's referring to, is the resolution. The resolution historically is presented at annual conference, very few questions are asked, and it's ratified. There, you do have the opportunity as your lay delegate from your church and your pastor from your church that attend annual conference are able to ask questions and present modifications or amendments to that unit insurance plan resolution from the floor of annual conference. So I suggest going to our website, neumc.org, under the About Us section in the annual conference sessions. The journal for the last 15, 20 years is posted there. And if you open it up and just type in the search box, unit insurance plan, you'll see the resolution. You'll see the language of the resolution, and that is your answer as to why you can't purchase locally on your own.
Carrie, I think there's an exception to those few churches that are combined, like with the UCC church. They're only like half United Methodist and half something else. But
correct. So if your church is a federated congregation, that the the property is not owned by the UMC, meaning your deed to your property does not have the trust clause as outlined in Book of Discipline, meaning the United Methodist denomination does not own the property, rather UCC does, then you are permitted to go outside the unit insurance plan. However, if your property is owned by the UMC portion of the federated congregation, you do need, you'll be covered by a trust clause and you'll need to participate. That being said, I've had 3 churches that are federated churches that have not been involved in our unit insurance plan for several years that reached out just this week because their premium skyrocketed on their own and they want in on our unit insurance plan. And so, definitely for those federated congregations, it's worth looking more deeply into. Another question that has come up related to the 3-year roll up and roll down, essentially. If we saw a decrease this year because we were a church doing this subsidizing in the past, will we continue to see a decrease over the 3-year period, or will it be flat?
You will continue to see decreases for the 3-year period.
Thank you.
And I apologize for that, but thank you for being good stewards and letting us do this over 3 years.
Thank you. Follow up to the insurance plan resolution from Pastor Amy Sawtell. The insurance plan is part of the consent calendar, so it takes 10 signatures to remove from the consent calendar for it to be discussed. So thank you, Amy, for that information. So as we're talking about annual conference, if that is something that you want to bring back to your lay representative and your pastor who are attending annual conference, that's good information to relay. Thank you, Amy. Will Erica's PowerPoint slides be available online? Yes, we will post the slides, the recording of this presentation, as well as the transcripts for the Q&A, all on our conference website under the property insurance area. And we'll send out another blast email to all the folks that received our email, letting you guys know when that has occurred. What else we got?
I can talk to the emergent situation question.
Yes, thank you.
There is coverage in the event of a property claim. There's a fire department service charge coverage built in. So that's $50,000 per occurrence, but it's only related to a property incident.
Jeff, what if I was seeing that one also? What if there was a covered general liability loss as a result? Could that possibly be covered if somebody was hurt, slipped and fell, and an ambulance was called, and there was then a subsequent general liability claim?
No, there's no liability enhancement for a fire department service charge or an ambulance charge, only on the property side.
Great. And Jeff, maybe you can answer, our annual statistical reports have us report total market value of church properties, including land. Shouldn't they split out land value? And I'm assuming they being SIG in that information that you guys have sent out.
No, I think that would be the conference charge reports, maybe. We wouldn't ask for land value. So we're wholly focused on replacement cost.
Right.
Right. So the churches are being asked, so what they're asking if SIG can break it down for them. A lot of, similar to the questions that you and I have been bouncing back and
Yeah.
forth with, can I see the breakdown between parsonage and church buildings? That is asked in their charge conference forms. And so I think that's probably the intent of that question, is how to get that breakdown.
Yes, so Church Mutual doesn't provide a per building cost, right? So the number we get from Church Mutual is basically just, here's the cost for your property coverages and your liability coverages. That includes your sexual abuse coverage, counseling coverage, general liability coverage. We get one number from them per church. And so we can't break it down exactly further than that. So I can't give you a direct, here's your sexual misconduct liability charge for the year. Here's your contents charge for the parsonage building specifically, right? So we can try to give you an estimate based on, you know, your total charge and, you know, the approximate percentage of your total insured value. But as Erica kind of talked to very well, that's not exact. It's not saying that if you removed coverage for contents at your parsonage, this is how much exactly your premium would go down by.
Okay. And so to piggyback that, Jeff, as a church is looking at the timing to review their coverage levels for their church, number one clarification, the coverage levels are dictated by the unit insurance plan and the insurance committee. The churches do have the option to reduce their contents coverage though, correct?
That's, yeah, with us, they certainly can.
Yep.
Yeah.
And what would be the right time, the timing to review for those churches to make that decision?
Well, I think we have to, I mean, as Erica spoke to, right? I mean, we have to be kind of cautious with how allocations are being done right now. Erica, what do you think?
I think that as we go into the next renewal cycle, next spring, we will come out and we will have a process to show you what you have and get you ready for the next renewal cycle for changing that if necessary. So, and that makes total sense. It's, yeah. I mean, at one point, my church had $30 million of contents coverage, which is a fascinating thing. So sometimes these numbers get really out of whack. So,
I would agree.
yeah, but we will come out. We will show. We'll find a way to show you the information. We'll find a way for you to give us back information on that, so that we have time to get it ready for the renewal, and you will understand the impact of it.
Great. And in the chat box, we had a question that came up earlier that I asked to go to the Q&A, but I'm going back into the chat. So the question has come up about the next renewal, kind of transitioning to that calendar year. So I'm trying to read through this here and make sure I understand it. So if we pay, when to pay?
So the calendar year,
looking-
okay, yeah. So I think I understand this one, Carrie. So the
Thank you.
question is, what if I pay now, except you're going to renew it up? Okay. So the way it's going to work is this renewal is from September to September. And then
August to August.
Yeah.
or sorry, August to August. And then we're going to have a little extension that gets us to be to 1/1. Okay. So the premium you're paying now is a full year's worth of premium. Then we're going to have a little extension period to get us to the 1/1 renewal. And then we're going to start being annual, so that the premium will be known when you're doing your budgeting in the fall and not be changing in the middle of the summer. But that's happening next year. This year is still that thing. And we are going to come back, because that premium reduction thing too is something else we have to look at, because that's not something Church Mutual gives us. That's something we're doing ourselves. And we have to understand, does it make sense? And what's the cost of doing that? So there's a lot of stuff to happen. And if you want to be, again, front and center, insurance committee, it's the place to be. Looking for people who are interested in this stuff. Other questions, Carrie?
The only other question is the rate premium quoted for the upcoming year actually a rate that stays fixed through December of next year? And I think you kind of just addressed that.
I think it does, Jeff. I mean, I don't think they're changing it next year. I think we just do a 4-month or 5-month renewal, right?
So yes, so Church Mutual is not filed to do short-term or long-term policies, so they have to do 12-month policies. So what we're doing is, right, we have an 8/1/25 to an 8/1/26, then we're gonna have an 8/1/26 to a 1/1/27. And what Church Mutual is basically committed to us is that when we negotiate the renewal next year for 8/1/26, is that they're not going to ding you twice, right? So you're not going to get dinged at 8/1/26 and then again at 1/1, right? So essentially it will act as if it's a long-term policy, but it is going to be two separate policies because they're not filed to actually do a long-term policy.
Okay. The only other thing in the Q&A is a comment from our conference lay leader, Dan Gannat. thank you all for the hard work to support our local churches. So, the insurance committee does a lot of work in a short amount of time with a few hands here. So again, as Erica has said, you know, if you're interested in helping out with this and being a part of, you know, these difficult decisions, please reach out to your district superintendent. This is a great group of folks that dedicate a lot of time and energy to this. So I want to thank all of our insurance committee members for participating this evening and doing a lot for us with this renewal cycle. And our new brokers, Sovereign Insurance Group, Jeff Evans, Matt Hayes, his team there, and David Palmer's also saying ditto. We are very blessed with a great team of folks to work with. So thank you all very much for all your time this evening. Again, this recording will be posted, the PowerPoints and the transcripts from the Q&A will all be on our conference website within a couple of days. An email will go out to folks letting you know it's there and available. If you have any questions as you review that information or anything else comes up later, feel free to reach out to myself. I can get you in touch with Erica. Sovereign Insurance Group's contact information, including Jeff Evans, is available on our conference website, www.neumc.org. At the top banner under Finance, Administration, and Benefits, you're looking for Property and Workers' Comp Insurance. And that's where you're going to find the contact information for Sovereign and Jeff. Thank you all very much for participating and have a lovely evening.
Yeah, thanks
Thank you,
everybody.
folks.
Thanks, everyone.